In this video, I'm going to be breaking down exactly how I helped an AI agency find $55,000 in tax savings. This is the full audit that we did and all the strategies that we recommended that they implement. So you can see here by the screenshot that before what they were going to pay as a total liability, their taxable income, the savings that we identified with different strategies in place, and then afterwards, what the tax position could look like if they were to implement everything that we suggested. So, this particular client is a B2B service business. They have a marketing agency. What they do is they provide AI and software engineering services to B2B SaaS companies, basically helping them build software that works well and drives new sales and retains customers. So, a very sticky solution and very valuable offering to this marketplace. They're located in Texas in the United States. We projected that their revenue for the year would be $1.5 million, and we projected that their income would be $520,000. The tax liability we projected to be $153,000. Team size, they have 3 employees, multiple contractors. Entity structure, they were an S Corp before they started working with us. The years in business, they've been in business for about 3 years now. And for their current accounting setup, they have a bookkeeper and just a year end CPA that they work with. So when they came to us, this business owner had a few problems initially. So one of them was they were waiting until it was time to file their taxes. So he knew this right away, and he made it clear to me as well that he was being very reactive when it came to his taxes. By the time tax season rolled around, he was rushing to understand what he could do. The whole year he was spent growing the business, getting more leads, generating sales, clients, hiring team members, that he had no time to focus on the financial picture at all. So when it finally was top of mind and he had to start filing his taxes, only then he was trying to see what could I do now to lower the tax bill. But by that point, he'd lost so many opportunities to do so that he was just paying a massive bill well into the 6 figures. If he had looked at things beforehand, he could have had more time to implement strategies so that he could have lowered it instead of dealing with it at the end of it. He also had no plan for the year. He knew that he wanted to reduce his tax liability, as every business owner does, so he wanted more planning going forward. That way, he could know 3 to over 12 months out what to expect for taxes, cash flow, and profits. And he actually had a pretty healthy cash reserve balance, so his cash flow was good. But if he had a plan in place, especially on the tax side, where he knew going into it, here's what my tax liability looks like, he could plan how cash comes in and out of the business way better around that position instead of just guessing and then dealing with it when it comes to play. The other problem he had was he had no visibility into any of his numbers. So this was more of a financial thing that we found. And he wanted to get ahead of the curve instead of always just playing catch up like he was doing for these other two things. Things like understanding his liability on a month to month basis while his business was growing, again, instead of just guessing, and knowing how to better set money aside for taxes, hires, and growth plans so that money wasn't just sitting stagnant in bank accounts on the business, not growing or not making him any money, or he wasn't pulling money out and he actually had a bigger tax bill, in which case he should have left that money into play. So having better visibility into his numbers would solve a lot of those problems. And so, what we found when we did the initial audit is we found 3 specific problems highlighting some of the things that he was saying. So, the first one was a year end tax accountant. So, most people have this, and it's fine for a lot of businesses. It works, it gets your taxes filed. There's no problem with it. It's just for someone like him at 7 plus figures, he's really scaling. He's really putting a lot more money towards paid ads. His team growing the business overall. This one is surely going to cost him money if he doesn't get away from this. And he already mentioned how slow his accountant takes to respond to him, sometimes up to 2 weeks just to get an answer back. Especially like some of the things I was saying at the level he's at, you can't afford to wait that long. If you wait that long, you could miss key opportunities, whether it's a tax strategy, you want to put money towards maybe like a seasonal promotion thing, or you need to hire someone immediately. You can't have someone that's your advisor waiting weeks to get back to you. You need almost daily responses with them. So this was a problem for him going forward. The other problem that we saw was he's not maxing out retirement accounts. So for someone like him, this is just low hanging fruit because he has tons of disposable income. He wants to invest more as well. So this is just easy thing for him to do, put money away towards the right accounts, and he gets a tax benefit for it. So he gets a double win. And then the other thing we found was no large investments. So, like I was saying before, he has actually very healthy cash reserves, well over $100,000, which is going to keep growing because he does manage his cash well pretty good for the most part. And part of it could now go towards investments that are tax advantage and build his wealth. Instead of just sitting in an account doing nothing and collecting dust, he wants to know what he can do with that money. And there's advantages and investments that he can put it towards that are tax advantage and build wealth and can save him a whole lot more money than it's going to do sitting in some random bank account. So, based on that, here's what we recommended. We recommended that he implement 5 initial strategies to get the ball rolling. First was to build a year-round tax planning system. So this includes a custom tax plan for 2026 with strategies built just for him, monthly and quarterly strategy calls. That way we know when the business is changing, revenue changes, how can we adjust the plan and make new implementations. Quarterly adjustments to his plan based on the quarterly strategy calls that we would do with him so that his plan never grows old and it's not static, it's dynamic, changing with the business, so he's always optimized. The tax savings on this is infinite. There's no way to put a specific ROI to it. It's just knowing that you will get savings from it, and this builds on any other strategy we do to come. The other strategy that we recommended was maximizing retirement contributions. So for him, setting up a solo 401k or even a cash balance plan would be beneficial. As a business owner, he can put way more money towards that. And like I was saying before, he has a lot of disposable income. He can actually do this. He's a great candidate for this. So we recommended a contribution of $40,000 to this just to get the ball rolling. Tax savings on that would be about $10,000. We also recommended he put in an accountable plan. He just didn't have this for himself, and it's an easy, low-hanging fruit so that he can reimburse himself and employees for expenses in the business. Tax savings would be about $5,000 for this. Then the board of directors. So he has a wife, and she may want to join the business and be in planning meetings so that they can get some tax benefits and some income, and she can help out with the business, which is a great thing to do as a family. Tax savings on this was estimated to be about $1,800. And the last one, this is the big money mover and the big ticket item, was charitable finance. So this is donating stocks and real estate that he owns to get a tax benefit. Things like avoiding capital gains to a certain extent and all the appreciation. He can put those stocks and stuff and donate them instead to get those tax benefits. Tax savings on this was about $40,000, taking up the majority of the full tax savings that we calculated. So here's a tax savings summary. So before, this is what it would have looked like without doing anything that we suggested, is if he never worked with us. Revenue would have been 1.5 million, taxable income at 520,000, federal tax at $153,000, and a tax rate of about 30%. Afterwards, if he was to implement everything that we were saying, here's what it would look like. So revenue at $1.5 million, taxable income would be at $312,000. So that's a 40% decrease in how much of his money is getting taxed. And his federal tax would drop to $98,000. So that's a 36% decrease versus what he would normally owe, for a total tax savings of $55,000. His projected ROI on services, if he was to working with us, would be a 2 to 3.5x ROI. And that's just for the tax planning side of it. That doesn't count for if he needs higher level strategies, like if he needs like CFO advisory or even higher level bookkeeping. Those would contribute to even more of an ROI. This is just the tax planning piece part of it. So the key takeaway here, the main thing to watch out for if you're watching this and this relates to you and this is sort of like your situation, is the earlier in the year you start this, the more savings you can realize. If you wait until tax season starts, you definitely will miss 90% of all opportunities that you could have done to lower the tax bill. That's not an opinion, that's a fact, given just the way the tax system works. If you were to wait until November or December of the current year, you wait all the way till the end and then you scramble to get some tax moves in place, you might still miss 60% of opportunities. Main reason for that is that, last minute things sometimes don't go into play. If you were to do this earlier in the year, you have way less of a chance of things not being able to work out or different accounts where you can't put money towards. It's just waiting till the last second can kill you here. But if you focus on this quarterly and especially monthly, from January all the way through December, every month of the year, this is a top focus. You will see the biggest savings and can capture almost any opportunity before they pass. I don't care how quick your business is growing or changing, this is the only way that you can truly capture the savings you want. So start putting a real plan together way ahead of time, way before you need it. And if you want similar results to this, if you want things like my client has here, where you'd also like to pay less taxes, make smarter financial decisions all year round, and scale profitably, then I invite you to get your free 12-month profit and tax savings roadmap with me. So, what we'll do for that is audit the last 2 years of tax returns to find where you're overpaying and any missed deductions. We'll review your P&L to spot where money is quietly leaking out of the business, project your current year tax liability so there are no surprises and you can start to work on it before that tax bill hits. You can identify specific savings across taxes, cash flow, and profits. We'll deliver a personalized 12-month financial roadmap to capture it all and guaranteed to find at least $25,000 in immediate savings for you. If that interests you, link is in the bio to get started.